Today's HomeWise topic is loan assumptions. Tyler Osby is joining me, a mortgage lender of many years in the Des Moines metro area and a real estate professional. Tyler, first of all, let's start by defining loan assumptions. What are they? We're hearing people talk about them today.
Yeah, well, loan assumptions when you're able to take over someone else's existing mortgage at the interest rate that they obtained.
Okay, and that is an attractive thing to people right now. For what reason? Why are people talking about this?
A lot of people live in homes with significantly below market interest rates from where they're at right now, so they're interested in trying to take that because with a lower interest rate comes a lower payment.
So if you're a buyer and you're interested in purchasing a home and taking on that person's interest rate, how do you do that? And we'll move along to garage door number 2 because this is where we want to discuss how do you even start that conversation?
Yeah. Well, so the seller would have to initiate the conversation to determine if the loan that they have is actually an assumable mortgage. Not all loans are created to be assumable. The big ones that are government backed, so if you got FHA or VA, sometimes USDA, they're available to be assumed, subject to the lender's approval, whoever they're making their mortgage payments to.
It sounds almost too good to be true. How do you know if it is a realistic option that you're getting into?
You just go through the process that their lender has in place.
Okay.
They'll require an application fee of some kind, and then you start the process. And I know we've got a little bit more to cover on that.
We do. So let's get to garage door number 3 where we talk about this process of loan assumptions because again, it sounds like a great idea. I'm just going to take on the interest rate that the person who's selling the house has on their loan right now. Doesn't that just sound magical? So
Always.
put this into context for us. If you were to do a loan assumption, what do your expectations need to be?
I think expectations are key. Like anytime I look at a business, I always try to figure out how do they make money because then I can understand the behavior.
Sure.
And a loan assumption is more of a service than it is any kind of ability to generate income. So they don't have the infrastructure there to really deliver like a super great experience. So they have, skeleton staffing for these servicing departments that do the loan assumptions. And because it's kind of low staffed and not a big income generator, it can take a while to get an answer. So that open-ended timeline is wildly important.
Okay, what have you seen in your experience, like as far as timelines? Have you seen them take months, several months?
Well, I hear a lot of different stories. I'm not directly involved in loan assumptions, but I've heard anything from 30 days to be the fastest, and that was like a very, very vanilla situation. And then I've seen deals where I think they've been working at it for 6 months and still haven't figured it out. So open-ended is really important.
And when we say plan for the difference, what are we talking about there?
Yeah, well, an assumable mortgage means you're assuming the mortgage that's already in place. And with homes appreciating and having probably a higher sales price than what you have owed on the loan, you need to be able to cover the difference. So if you are assuming a loan, you need to be able to come in with the difference generally by way of cash, because from what I've understood, they very rarely approve loans where you have a second mortgage being the source to cover the difference. So either it's a gift from a family member or a 401k loan or just money that they have saved up to cover the difference.
A lot of fine little bullet points involved with loan assumptions. And if you want some help with these or understanding them more, please reach out to your local real estate professional or mortgage lender. They'll be happy to help. Thanks, Tyler.
You bet.
And thanks for joining us.